All right, here is what I call accounting at 30,000 feet. This is actually going to be the visualization of accounting. You know, when you learn accounting in school, they kind of teach you these books. You read the books and you go learn journal entries, but you really don't ever really get to see how it actually works. Um, and it's kind of like the movie My Cousin Vinny, where Melissa Tomei is yelling at Vinny when she's like, "Well, didn't you learn that stuff in law school?" And the answer is no. We learn about law. You know, they don't actually learn how to do it. And accounting is kind of the same way. So if you went out and bought an accounting book, they'd kind of go over some theory. They'd show you how to do journal entries, but they don't actually show it to you from a visual level. And that's what we're going to do here. And I think once you see how the whole thing works, it's going to be like, this is definitely not as hard as I thought it was going to be. Because the reality is there's only 5 buckets. There's only 5 things you need to know: asset, liabilities, equity, revenue, and expense. Everything has to fit in those 5 categories. So when you start looking at it from that aspect, it's really not as complicated as you think. So, but let's show it to you so you can see it from the upper level. And once you see it visually, you'll say, hey, this isn't as complicated as I thought. And then if you're having trouble, just continue to watch it over and over again, and it should sink in. All right, so what we have here is a company I created, XYZ. It's QuickBooks 15. There's no transactions in this thing yet, so we're going to make them as we go along. The first thing I'm going to do is I'm going to create a report in here called Transaction Detail by Account. I'm going to customize this a little bit. Okay, we got the debit and credit split. All right, we're all good on this. All right, so the first thing we're going to do is we're going to come in here and we're going to record a sale. We're going to make a deposit, and we received it from our customer, which is ME. It's going to hit the revenue account, consulting income, and it's $20,000. So what's happening here is you got $20,000 going into your bank and $20,000 in revenue. So you have two transactions here, and you're going to see it. All right, so now with this transaction detail by account report, you can see the deposit to the bank, $20,000, and you can see the net income, or the income, is $20,000. So if we come over here and we pull up the profit and loss, you can see the consulting income of $20,000. There's no expenses yet, so your net income is $20,000. And if you went to the balance sheet, you're going to see now that there is $20,000 in the bank, and your net income equity section now is $20,000. Okay, it's back to this general detail report. So now we're going to go in here and we are going to go buy a SUV. So we're going to go banking. We're going to write a check, and we're going to buy right at the Ford. And we're going to put down $5,000 on this SUV. And we put it to the SUV account. Save and close. There's your $5,000 check to Ford. There's your $5,000 in your asset SUV account. All right, but we bought the thing for $20,000, and we took a $15,000 loan. So we're just going to come in here. Now this is the kind of stuff you might not know, but I just want you to be able to visualize this so you can see how it all works. So we need to do a journal entry to add $15,000 to the truck account. And we need to add $15,000 to the SUV loan account, which is a liability. Save and close. Refresh report. So now you come over here, you can see the $20,000 deposit, your check for $5,000 of Ford, which is also hitting your SUV asset truck account, and then that's your balance to $15,000, which is also the same amount for the loan. Everything ties out. Your balance, everything ties. $40,000. We come over here, we look at the balance sheet, and refresh it. You got $15,000 now in your checking account because you deposited $20 and you spent $5,000 for the asset. Your SUV is now $20,000. Your loan is $15,000, and your net income is still $20,000. Because that $5,000 check is not an expense, it's an asset. So it goes to the asset side of the balance sheet. Same thing with the loan. It's not an expense, it's a liability. Okay, so now we're going to come in here and we're going to write another check. We bought some office supplies. So Office Depot, $250. Hit it to Office Supplies. Save and close. Refresh your journal ledger. And now you can see here's your $20,000 deposit. There's your $5,000 truck payment or down payment. There's your $250 office supplies. There's your truck for $20. There's your loan for $15. Your income and your expense. So we've hit 4 out of the 5 buckets. We're going to do one more expense. We're going to go banking, write checks, and we're going to write it to John Smith. He's our vendor, and we're going to pay him $4,500. And we're going to hit it to the contractor account, which is an expense account. So he's like an independent contractor. Hit save and close. And you can see now your original revenue, $20,000. You spent $5,000 on the truck down payment, $250 in office supplies, $4,500 in John Smith, which is labor. Here's your SUV for $20, your SUV loan, your consulting income, your expense of John Smith, and your expense of Office Depot. All right, and we got one more transaction we want to do. Banking, write checks, and we're going to pay to the owner, who is Mary Jones. She's going to take out $5,000 for herself. We're going to hit that to the shareholder distribution account, which is an equity account. Save and close. Refresh. All right, so back to the top again. We got $20,000 bank deposit, which was our consulting income. $5,000 in the truck. Office Depot, $250. Office supplies. Labor to John Smith for $4,500. We draw from the owner $5,000. Here's your truck loan. Notice the check from Mary Jones, the owner, went to shareholder distributions. This is an equity account. This is how she pulled out her money. And the important thing about this is you're going to see this does not affect the profit and loss. We'll see that in a minute here. So consulting income is $20, the expense of $4,500. Office supplies is $250. Okay, so now let's go over here and look at the profit and loss statement. You have consulting income of $20,000, contractor expense of $4,500, office supplies of $250. There is no check to Mary Jones. So your net income is $15,250. So we'll flip over here, we'll look at the balance sheet, and you can see your bank account was originally $20,000, and we spent all this money. So we're now at $5,250. Your SUV is $20, your loan. Under the equity section, shareholder distributions of $5,000. Net income is this. The total equity section is now $10,500, and equity and liabilities equal $25,000. So this is a complete visual of the accounting, and you got to see how all these transactions interlinked and how they look visually. So if you go back again to the transaction detail account, this is every single transaction you made. Every side has 2 sides. So everything balances out. And this is where this shows you every single transaction. Now, if you look at the report every single week, you can see what went in, what went out, where it went, and to make sure it's in the right category. So to go through this every week, it's going to take about 5-10 minutes. And this is going to tell you where every nickel that came in and where every nickel that went out went. So if you look at this, you will have the pulse of your business. Again, it's really this simple. Here's your deposit, here's your expenses and withdrawals, bought a truck. There's a part that was cash. That's the part that was the loan. You took out $5,000 as officer pay. Well, not actually officer pay, but distribution of the profit. There's your revenue. And here's a couple of expenses. And notice the way this thing is all laid out. This is laid out just like your chart of accounts, where you have your assets first, your cash, your SUV, then your liabilities, your loan here for your truck, then equity, then income, then expenses. It is always laid out this way. It doesn't change. It is the same order as your chart of accounts. This is the entire visual of your business. And you can see your profit and loss. All these reports, profit and loss, balance sheet, cash flow, is all derived from your detail accounting. Anyways, I hope this helps. Review this one several times. This is the most complicated thing that we're going to go over. But once you kind of get how this thing flows and the visualization of it, this is it. It's not any more complicated than this. So I know we covered a lot here because I made sure we hit all five buckets: assets, liabilities, equity, revenue, and expenses. Everything has to hit those 5 buckets. So once you understand there's only 5 things to classify a transaction, that's it. It's not any harder than that. And this is your main report that you need to look at every single week. If you look at this report every single week, you're going to know everything there is about the accounting side and finance side of your business. I hope this helps. If you have any questions on this one here, reach out to me, email me, call me, send me a message, and we'll help you through it. But if you're having trouble, watch this thing several times. And once you see it, I think it's really going to help you out a lot.